Welcome back. I'm Zanati Kuma and you're watching Stock Watch this week, and joining us for a review of the week's stock performances and answers to your stock-related questions is FNB Wealth and Investments' Wayne McCurrie. Send your questions via SMS to 41392, email at stockwatch@bdtv.co.za or tweet us at BusinessDayTV using the hashtag StockWatch. Thanks so much for your time. Wayne, I was actually reading an article earlier on this week, and it said that the analyst has said that he sees upside in the market right now, and that, forget the headwinds that we experienced earlier on this year and in 2022, but we're basically building from the bull market that we saw towards the end of 2021. Could that be the case where we have completely made up for the losses that we saw earlier on in this year and in 2022, and now we're building from 2021, and that this could actually be a sustained bull market?
I agree that I think we're going to get a sustained bull market. Whether it's building up from 2021, I just don't know. Because in the last 2 years, from 2021 until now, we've seen dramatic increases in interest rates. But let's put that aside. I think we're going to get a bull market. Firstly, the reasons is inflation is falling worldwide. Interest rates worldwide, including South Africa, will also fall over the next year or two. We'll see a revival in the commodity cycle. And hopefully we sort out Eskom a little bit, and we sort out Transnet a little bit, and all of our own domestic problems don't get any worse, and hopefully get a little bit better over the next 2 or 3 years. But the big decider is still the commodity cycle. Yeah. If I'm right on that, we'll see a dramatic reversal of fortunes in South Africa in total. We see a much stronger rand. We'll see our stock market actually going up very strongly. I mean, our own estimates of what the stock market could do is actually, it's quite material. It's up significantly from this level if we write about, obviously, all of our assumptions. But I think we are going to go into a bull market. In other words, where we are now, or maybe it's just turned this last month, maybe it turned in November, because the November performances were actually quite good. But certainly things hopefully start getting better from this point and be over the worst.
Yeah, and from what I'm getting, it could be a more broad-based bull market, because, of course, we have seen this year with the green shoots that we've seen in the markets. Those have largely come from specific stocks, for example, NVIDIA. That's basically where it's driving up the whole market. So this could now be more broad-based because the macroeconomics are creating better conditions for the companies operating there. Well, here's hoping that that will be the case, Wayne. Wayne, a lot of people have been asking about high return on equity stocks, and actually Bidcorp keeps on coming up. And there's actually a question here on Bidcorp. Does Bidcorp currently offer value?
Yes, it does offer reasonable value. It's not cheap. There are, in my view, way cheaper shares. Maybe you should be buying Bidvest after it gone down this week. But Bidcorp is a very, very high quality company. They're in quite stable markets. In other words, everyone's got to eat. Everyone's got to, it's not a cyclical market per se. And certainly Bidcorp, well, it was still Bidvest at the time. Yeah. They're one of the only South African companies outside of the mining companies who were, in fact, very, very successful in their overseas adventures and acquisitions. It truly is an outlier in that respect. And even though we don't think it's terribly cheap at the moment, I mean, we don't think it's going to collapse on you. It's not expensive. Yeah. And we wouldn't buy any more now. It is a very big share in our portfolios, and probably always will be because of its quality.
Yeah. And actually, as you're talking about Bidvest, and obviously that's also another company that is, has experienced success in the geographies that it is in. And of course, this is a well-loved stock in the market. Until this week, you did mention the pressure that we saw. I think we saw about an 8% drop in its share price when it released its, I think it's a 4-month voluntary trading update. What did you think of this, Wayne? Of course, I do know that it came out of its AGM, but you have said before, when a company releases a voluntary trading statement, either things are really good or they're bad. So what was your take on
really good or they're really bad. Yeah.
Yes, exactly.
So unfortunately, this one was really bad.
Yeah.
But I think we've got to see it maybe in a bit of context. First of all, it's only 4 months.
Yeah.
Secondly, the one half of their business did quite well, which is the services business.
Yeah.
Where they hit a problem is on the non-services side, and there's very specifically durable goods. And within durable goods, very specifically, load shedding items, inverters, solar panels. I mean, Voltex couldn't sell them quick enough when we had in May, when we had big stage 6 load shedding. They just couldn't sell them fast enough. I actually went to a local Voltex store here, and the reception area where the customers normally stand waiting to be served was like a warren, was like a maze, because they had the solar panels stacked to the ceiling in the customer service area because they had nowhere else to store them. But of course, when the load shedding sort of abated in June onwards, they sat with a lot of extra stock and they didn't make the sales that they anticipated. And that's one of the big reasons why they gave such a negative trading update. That's cyclical. I mean, this load shedding we've had in the last week at stage 6, maybe the people are back at Voltex buying solar panels and inverters and batteries and everything. So, but it's a temporary thing. And a Bidvest is an extremely well-run company. It's been around forever. It is a blue chip, and there are not many of them around. I would actually buy at this level. I think it's an opportunity to buy a company that's hit some temporary headwinds. This isn't structural for Bidvest.
Yeah, and you're actually right, Wade. It is cyclical because, I mean, when load shedding starts to kind of get reduced, people are just like, it's, we hold on to this hope that things are getting better. But even on my way to work today, I did see on the highway solar panels being put onto one of the company buildings over there. So, people really tired of this.
It's actually quite interesting. The private sector, when it gets going, gets going. It's not like the government that talks a lot but doesn't ever get going, really. When the private sector gets going, it gets going. So we've built a Madupi in solar panels in 8 months. So
True.
And it's interesting. Go for an aeroplane flight in and out of OR Tambo or anywhere, I suppose, and look out the window. There's a lot of solar panels.
Indeed. Wayne, what's been quite interesting. So Quantum Foods came out with an update today, of course, saying that their profits are going into the red because of the avian flu. And I actually thought, let me look at Astral, because the last time, I think, when they released results, you did see investors plowing in there. And I actually decided, let me actually just look, because I wasn't sure if that was a significant turnaround, if maybe the markets think that the stock is bottoming out. But I actually looked at a 5-year chart, and the share price hasn't really moved. And I'm wondering what your take on Astral is, and if we could see any kind of sustained significant growth, even after the avian flu situation.
Yeah. Look, I used to believe 20, 30 years ago, whenever I started in investments, that you could buy any company as long as the share price was cheap enough. Didn't matter what industry it was in, didn't matter what its history was. And I've changed the views over the last couple of decades. These primary agricultural food producing companies are just too volatile. You never know what's coming next. Whether it's the bird flu or fishing quotas. So I include, RCL in here. I include the fishing companies. These are heavily cyclical businesses. And because they're agricultural based, there's so much that's outside of the control of management. You can have the best management in the world running these companies, but if there's a problem like the Asian flu or oversupply of chickens in South America, or the currents are wrong in the Atlantic Ocean and there's no fish around, I honestly, I don't think I'll ever buy one of these companies again in my life, no matter how cheap it looks. So, that's my view on the fishing companies and the chicken companies.
What about Tiger Brands? Still in the food producing sector. It came out with its results today, and seeming that markets were quite okay with the numbers there.
Yeah. I must say the numbers were actually quite reasonable given the circumstances they find themselves in. Look, the way people like Tiger Brands, because they process food and half their business is very, very basic commodities. The other half is fast-moving consumer goods with, some brand value to it. And what happens is when agricultural prices go up, as we've seen, their margin gets squeezed because they can't pass all of those cost increases over to the customer. But like where we are now, food inflation has fallen from 15%, I think, to 5 or something like that. It is coming down, that they don't cut their prices as quick as what the input costs come down. So they actually get a little bit less pressure on their margin. And I think that's what we're seeing now with Tigers. It wasn't a bad set of results, as I said, but the market was by and large anticipating this.
Wayne, we're going into the festive season. It is the 1st of December, and a lot of people buying stuff and spending on hospitality services. I'm wondering at this point, who would you be betting on in terms of sectors, hospitality or retail, or maybe the restaurant counters?
Look, the retail shares in particular in South Africa are actually very, very cheap. But then so's our overall market. When that market turned, or when it will turn, I just don't know. But to answer your question specifically, the one growth area we've got in South Africa now is travel and leisure and tourism. Lots of foreigners are coming here because it's dirt cheap. You get a fantastic experience for your pounds or your dollars or your euros. I mean, it is truly cheap coming here now with our exchange rate. And we all know, have got world-class tourist facilities here. And despite all of our other problems, load shedding, everything else, it is still a very, very attractive tourist destination. So I would go for Southern Sun, Chogo Sun, maybe even City Lodge. Go for Zeda, the car rental company. They're heavily involved with that. Yeah, so those would be my choices. And I actually do like them, because when you read their results that they came up with, I mean, Zeda came up with their results quite recently. The market is booming. You fly anywhere in South Africa now, there's no empty seats on the aeroplanes.
Yeah. Would you be going for Growth Point as well, since it does have that exposure to V&A waterfront, or would you be looking at it holistically, that there are other parts of the business that maybe aren't going to do as well as the V&A waterfront?
Look, I would go for Growth Point and other property companies, but not for that reason.
Yeah.
When you look at Growth Point's own results and Vukele's results and Fairvest results and all the property companies that have recently reported, the worst is over. You can see it quite clearly. Their vacancies are coming down, and specifically their office vacancies are coming down. When tenants renew their lease, you get a thing called a reversion. In other words, you reset your lease. And for years now, it's been negative. In other words, the prices have actually dropped. That has also reversed. The reversions aren't positive yet, but they're a lot less negative. And in fact, for Kelly, they actually did turn positive. They're getting fairly decent rental escalations in the new leases, and they essentially letting out vacant space. So I think the worst is over, specifically in the office market, but in the whole in the whole property market as well. And these shares do represent actually quite good value at these levels.
All right. Well, let's talk about, we were talking about retailers just now as well. Going into Lewis, they came out with their numbers yesterday. And I mean, they are doing well, even though you would think that in this environment, any company with a lot of credit exposure would be struggling. Would you say that Lewis is basically one of the more defensive ones in that space, in that kind of credit retail space?
Yeah. Look, I was quite surprised as to how, reasonable their numbers were, because everything else you see, I mean, including Bidvest that we spoke about earlier on, the durable goods side is suffering, and yet they seem all right. So I thought it was quite a credible set of numbers, but it was a reasonable set of numbers, yes.
All right. Spar, quickly, before we get to your stock pick, Wayne, Spar, of course, still experiencing headwinds. I mean, they had guided well on those, the SAP implementation, Poland, as well as Switzerland. Is that a conversation for Spar to be selling the Switzerland business?
Yeah, look, they've hit, almost a perfect storm.
Yeah.
They had that implementation of SAP in KZN that was catastrophic.
Yeah.
I mean, that cost them, wasn't it 1.6 billion rand turnover and about 700 million rands worth of profits? Then in their island business, they had to rejig how they process meat or something and also make a huge provision against that. Then in their Poland business that they're selling, they had to write off another 400 odd million rand against that business. And then just to make matters worse, ShopRite Checkers here in South Africa is cleaning everyone up.
Yeah.
So they got stiff competition in their home market as well from ShopRite Checkers and specifically the 60/60 part of Checkers. So, things can't get much worse for them. They've also had some management issues that we know about going back a little bit of time now. I would still be, I prefer to buy Woolworths and maybe Pick and Pay for Spar. I think they've still got a way to go to sort out their things. But Woolworths and, of course, ShopRite itself would be my choice here.
All right. Well, let's get to your other choice for today. Wayne, your stock pick, what will it be?
Well, look, I'm actually going for the same stock pick that I've done already this week because I've gone through it again and I'm more convinced. And as we were talking about earlier on, I'm going for Bidvest.
Okay.
And you don't often get, I don't think you often get a chance to buy a truly good company, quality company, good management, good products, good history at a little bit of a discounted price because of a small stumbling block that they've hit now. So I would once again go for Bidvest. I think it's the right thing to do. I know we're not allowed a second stock pick, but just looking at the market today, the mining shares are running like crazy. Maybe you should pick a Anglo-American or something like that as well, because they certainly seem to be running.
Well, thank you for that. Definitely a sale there. You've given us a sale there on the stocks. Thank you very much for your time, Wayne. Really appreciate it. That was FNB Wealth and Investments' Wayne McCurrie. And that's all from the Business Lunch team today. Nolutando and the team are back next week, Monday, same time, same place. Catch Ndawling on the close at 6 p.m. this evening. But until then, stay tuned for lots more coming up right here on Business Day TV.